Hello everyone, my name is Sunday and welcome to Against FX. Today's episode we are going to be treating or we'll start with strategy. All right. I know most people will be waiting for this for a very long time. You need to know the strategy that you should be using as to get involved in the market. There are so many types of strategy, but majorly what I uh, teach or what I use in entering the market, the strategy that I chose is what we call SMC strategy. SMC strategy, like smart money concept strategy. It's a very simple concept, and this allow you to trade without having to start staring at the chart all day. Practically, what happens when you trade SMC, you you can just set your pending order and go and do any other thing. All right, once price gets to your POI, as point of interest, where you place your pending order, it will trigger and you're in the trade. As simple as that. Right, I just want to give you a demonstration so that you will understand what SMC uh, strategy is all about. And before we start, I want you guys to, it's time for us to uh, download trading software like TradingView. All right. So you go to tradingview.com. Tradingview.com. So you go to tradingview.com, or you just go to Google and type TradingView. It will give you, there will be, you see TradingView, then click it, then you can now download it. All right. Choose on your desktop, choose the desktop version. If you have Mac, you have any other listing, you choose it. You can see the options there. You choose one. Or if you want to download it on your phone, you just go to Play Store and type TradingView. All right, once you type TradingView, you just see it there, install it, download it, and install it. After that, you create an account. It's a normal thing to create an account. Because there's free version, there's pay version. So free version will allow you, whenever you do so many things, so there's no much difference. As a beginner, you need that free version, all right? You need the free version. It's okay. All right, then after that, apart from that, you still have those who wants to be using MT5. It's MT5, that is a new version, huh? The MT5. So you just go to Google, type MT5, and you download the software, then create an account. Okay. Once you are done, then we have different brokers. Once you are done downloading it, all you need to do is you come to the downside here, where you have all those trading panels, just put your cursor, drag it. Then you can now uh, link a broker to whether MetaTrader 5 that you downloaded or TradingView. So whichever one, but I would rather prefer TradingView because, well, it's your choice. Anyone you just feel like uh, you can choose. So it's up to you. So once you are done with that, okay, you know that you are set to now start practicing on a demo account. All right. So that being said, um, before we proceed, I would like to show you guys some few slides so that we will understand where we are headed. All right, so now we are starting. Let's start from this first slide. What is a strategy in forex trading? When we talk about strategy, a strategy in forex trading is your personal plan for navigating the currency markets. All right. It's a plan that you want to use to always get in, get out, and set rules. It's a structured set of rules and techniques that helps you make decisions. So basically, a strategy in trading, all right, is just a set of rules, a structured ones that will help you make quality decision instead of you trading with emotions, all right? So I'm going to teach all the strategies. Then the one you like, you pick, but the one that resonate with you, you can now pick, test it, and then stick to it. You just need to choose one. There is one that I trade, SMC, Smart Money Concept. It's okay. All right. All strategy works, but it depends on your trading style, what you want to, the kind of trading style you want to adopt. All right. So what a forex trading strategy includes, what it includes when to enter a trade. Those are the strategy when to enter a trade based on signals from charts, indicators, or news. All right. You need to know when to enter a trade because those are the things that it comprises. It comprises, that is your strategy now, when to enter a trade. Because based on your strategy rules, you should know when to enter a trade. And the next one is when to exit a trade, to lock in profit or cut losses. All right, if you are making profit, you must know when to exit. All right. Let's say you put your entry point, like I've already taught us, your entry point, your stop loss, then take profit. All right. So you must know at what point do I need to exit, and at what point do I need to place my stop loss after I've made my entry. All right. That will help me cut my losses when the trade is going against me. So I use that. That is the stop loss to protect my capital, to know when to exit the trade if it's going against me. All right. And the next one is how much capital to risk because your strategy will make you know, all right, how much capital you are risking. Let's say, for example, you have done your analysis and you have already spotted your entry point. All right. The next thing, what you need to consider is where your stop loss will be. All right. If the number of pip from your entry to your stop loss, if it's too much, please don't take the trade. All right. And there's another way you can as well take the trade is by reducing your lot size. All right. Is by reducing your lot size. I've already taught on that. So go and the video, then you watch it very well when I treated lot size. All right. So it can help you uh, how much capital to risk, all right? Because when you know your entry, your stop loss level, then that will determine, because it's your stop loss level, that will now determine the type of um, that will now determine the type of lot size that you should use. All right, because we have to first of all ascertain where to enter, where to put your stop loss. All right, your stop loss is what will now determine the lot size you should use. All right, when you do that, risk management is key because when you protect your capital, you always be in the game. But if your capital is at risk, it becomes problem. All right, because risk management is key. Another one is how to manage trade, whether to use stop losses, trade stops, or manual exit. So you must also know what and how to manage trade. All right. All these are strategy, all these are included in the strategy we are talking about. Because when you just say strategy, what are the things that it comprises? These are the things. It will let you know when to exit, when to enter, and how to protect your capital, how to manage the trade, how to stay disciplined. Staying disciplined to avoid emotional decisions and for you to stick to your plan anytime, any day. You have your checklist. If all these checklists are not met, you don't take the trade. All right? You don't take the trade. Anytime you want to take a trade, those you bring out your checklist, you must make sure, or rather ensure, that all these checklists are met. All the lists are met. All right, before you can take a trade. The next one is why use strategy? Because it keeps your decision in an objective manner without emotion. All right? Keeps your decision objective, not emotional. It makes you to trade without emotion. All right? When you have a strategy, it helps you control your emotions. It helps you stay disciplined. All right. Also, when you have a strategy, it helps you identify patterns in market behavior. All right. It helps you identify patterns in market behavior. All right. So let's say, for example, you have your rules for entry. So if those rules are not met, you don't need to do anything. All right? You don't need to do anything. Because if, like some people, they trade double top, anytime you see double tops, they are prepared. So they'll wait. Once you give them, go ahead, And once the double top is formed and or rather double bottom and all that, all those reversals, once all those things are formed, they get in straight away without any hesitation. All right. Once the checklist are met, you just need to you act. All right. It also improves consistency and make you stay disciplined. And it allow better risk and capital management because when you have a rule-based strategy, it allows better risk and capital management. Yes. Because you cannot just be jumping into anyhow trade. Otherwise, you are going to blow up your account. And also, it helps you to manage your capital well based on your rule-based strategy. All right. And we have types of forex trading strategies. All right. Strategy type and description, like scalping. Scalping, you have a super short trades, often seconds or minutes long. They don't stay on the chart. Once they see opportunity, they just get in. Before you know it, they get out. They are very, very focused, high focus, low margin. All right. Day trading, like almost every one of us, day trading, all trades close within the same day to avoid overnight risk or to allow overnight risk. All right. Also, swing trading. Trade held for days or weeks to catch larger price moves. Position trading, long-term trade based on microeconomic trend. We also have trend trading, follows the direction of market momentum. All right, trend trading. Range trading, buys low and sells high within a defined price range. Then news trading, we also have news trading, reacts to economic announcement and global events. All right. As you progress, you understand that every week there are news events. So when it's time for the news, people who takes that as their strategy, they will have to position. All right. Once the news is released, then you see market sentiment. There will always be a reaction. All right. And apart from that, we have retracement trading. All right. There's a push phase, then a pullback phase. There are people who what they do is wait till after the push phase is exhausted. Then when the retracement is about to start, they get in. All right. That is their strategy. They get in. And as the retracement is about to end, they take their profit and they are just cool. So that is how it is. That being said, let me show you guys uh, this. Um, okay, like I said, my personal strategy and the one I want you guys to learn is what we call SMC, Smart Money Concept. Smart Money Concept. Smart Money Concept. All right. Now, this is how it is. We have a, this is a trend push, pull back. Another push, breaking structure, pull back. Another push, breaking structure. We have a pullback. We have another push like this. All right. So now these are the support level. And here we have breaking of what? Structure to the upside. Breaking of structure to the upside. Okay. Now, like this, this is the guy here that caused the break of structure. All right? There is a guy here that triggered this push to the upside, breaking this structure. Now, the origin where this push originated from, there is a candlestick here, the last candlestick here, all right, that we call order block. Now, we say order block. That's the OB. That is the order block. Now, what we need to do now that the price has broken this structure and it has given us another price, a higher price, what we'll be expecting now is a pullback, all right? Pullback to come and interact with this level, then push again. So basically, SMC strategy simply means, okay, you have identified this order block that caused this break of structure to the upside. That is the origin. All right. Now, all we need to do is to wait for price, change character, break of structure, pull back, break of structure, pull back. Price will surely come back, tap us in. Once it gets here, that means it has come to interact with the origin that causes break of structure to the upside. And anytime price return back to the origin, what happens is that there will be a push, creating resistance, push to the downside, creating equal lows, then push to the upside, breaking that neck. All right. This one, it will now give us market shift, then price pull back to it, breaking structure to the upside, pull back, breaking structure to the upside. So basically, this is what SMC is all about. All right. Now, this is where we enter. You can play the open or you play the midpoint. All right. Like this, and you target this point of reversal. This is SMC strategy. This is just it. This is SMC strategy for you guys. A trend that has been going on. All right. Breaking structure to the upside. We know that is bullish. And now, after this last break of structure, this push, last break of structure, price created a high. Now, all we need to do is for us to look for what? The order block here that caused this break of structure to the upside. All right, we'll look for the origin that caused the break of structure to the upside. Now, usually there's always usually one candle before that this retracement push, this retracement, the last candle there before this push to the upside. All right. Another thing that you will notice is what? You notice FVG, fair value gap, or imbalance. If imbalance is here present, then you now know that, okay, this is an A plus FVG. This is an A plus setup. All right. You always make sure there's FVG close to the origin. What causes FVG is that price after this retracement, price will now push with full force as it's going higher, leaving a gap. All right, that is to tell you that the banks, the financial institutions, they are involved in the market. So, and another thing is that there must be what? Liquidity. The liquidity can be in form of sell side liquidity. Sell side liquidity. Let's say we just take like here to be liquidity because we know price will come back clearing that point before price as it has changed as the MS happens, we just know, okay, it's going to start breaking structure to the downside. So you will now use this as a liquidity to facilitate this push to the downside. So basically, this is what SMC strategy is all about. All right. This is SMC strategy. Now, this is where the origin that caused the break of structure to the upside. Then, once it creates a high and leaving imbalance here, all right, this is AVG, the price will now come back to interact with this level. Thereby, your pending order will be triggered. But don't forget the underlying trend is still bullish, but it's just coming back to interact with the other block here. Then you now start pushing to the upside. So this is how S&P strategy is all about. Now, let me show you on the chart physically so that you will know it. All right, you just know it sharply. So there's nothing, it's not difficult, right? So that you just know it once and for all. All right. Now we talked about breaking structure to the upside, right? So breaking structure to the upside. One moment, I'm going to show you guys now. All right, so price push like this, created a high, pull back, created a low. Right now, when price now wanted to push to the upside, you now push with full force and leaving us with what? This under block here. So leaving us with this other block. Price push like this. When it created this high, what happened? This is another block so that you understand it. This could be price pull back again to this level. Then immediately it got here, interacted with this point, then price now started pushing to the upside. You get the point. So it's like that. So this is the other block. Now the candle is what? A bearish candle. It could be a bullish candle, but most importantly, once the pullback is exhausted, this push will always be with volume. Once the push happens with with volume, then there's every likelihood that it's going to leave a gap. So we have fair value gap here. All right. So what is fair value gap here? We have identified the other block. This is fair value gap, and we know that price will come back to interact with this other block. After that, it will now start pushing to the upside. Exactly what I just drew. That is how it is, guys. That is how it is. Like this candlestick here now is white. It's a bearish candle, but it could be a bullish candle, right? This one before the push could be a bullish candle. All right. So what matters is after the last candle, once there is a volume, that is another block. All right, and that push should create another high price, the high price that is higher than the previous high, breaking structure. So it's like this. It's as simple as anything you can think of. It's not difficult. So all you need to do is once price push from here as it's going, allow it to go, let it get to let it break structure. Once it breaks structure, giving us a new price, then you just wait patiently for price to come back, return back to that level. Once it gets here, because you already have your pending order here, or if you don't, you can set alarm. All right, when price is pulling back to your POI, your point of interest, all right, close to your other block, you can set your alarm. Once you get there, it will trigger your alarm before anything so that you can even come and look at the trade and know the level where the price has got into. That's another way. That means if you're always at home and you are free, so you can do that. Otherwise, we just set a pending order. All right. So basically, that is just SMC trading. And if you want to, you say, okay, the downside, as in, for me to show you the bearish point, the bearish move, what you need to do is like this: price pulling back, push, pull back, another push, pull back, another push, then pull back, another push. All right, so it's as simple as that. What do we need to do now? We are waiting for price here. All right, waiting for price here. We look for that candle that causes break of structure to the downside. So what happened here? This is a break of structure. All right. I'm teaching you guys SMC strategy already. This is how it is taught. All right. Before you know, the only thing you need to do is you now that will now sit down and learn. I'm just giving you guys this for free. You're not paying for it. So you better take it seriously. Take it, in fact, you have to be serious about it. Huh? Once you learn it and master it, you can always do it. And you can always do it. So that is just it. So here we say OB, the other block. Why? Because this is what causes the push the break of structure to the downside. So this point here, what we now need to do, is what? We'll place our sell tool here. All right. We place our sell tool here to this point and pull it above it. We place our sell tool like this. Make our entry. Now, what we need to do is now the price has broken structure and it has created a new price, the high price. We'll just be patient for price now to now do like this, create a resistance, create a support, breaking the resistance by what we call change of character, come back, breaking structure to the upside, come back, breaking structure to the upside, then it will now tap us in, all right? Activate our order, then price will now push to the downside, creating support, push to the downside, push to the upside, creating resistance. This time around, is not going to violate this point, it's just going to create a higher low. No, it's going to create a lower high. Then the next point is price, giving us a market shift. All right, giving us a market shift, pull back, breaking structure, pull back, breaking structure, pull back, and breaking structure. So you can now see, guys, this is how it is. This is how it is, guys. So price breaking structure to the downside. Now it will now change character. All right. Push to the upside, tap us in, then it will now start change character, it will now start coming down. All right. So basically, this is what SMC trading strategy is all about. All you need to do is set your pending order here as price pull back, return back to this level. It will tap us in, then now start pushing to the downside. So that is how it is, guys. This is SMC trading, SMC strategy. I'm going to teach you so many strategies. So, but anyone that now resonate with you, you choose and run with it. That's all. You choose that and then run with it. So you can see now price, if we remove all those ones, all this, I should remove this. Okay, remove this for you to see them. Then you can now see price pushing to this up, retrace. Now it's trying to push to the outside. You see? So that is how it is. That is SMC strategy for you. We're going to see release part 2. It's the SMC strategy is going to be, this is going to be part 1. not money concept. SMC. Part one. So this is part one. So guys, this is how the SMC strategy it is. All right, this is how it is. All right. So with this, I want us to quickly call it a day, then you wait for the next episode. That being said, please do uh, share my video, like, and comment. Thank you, and God bless you.